Hello traders, this is FX with Q. Today is May the 7th, 2018. I'm going to open today's video by first discussing some trades that I made over the past few weeks, and then I'll move on to talk about some potential trades I see in the coming week. The first trade I'd like to talk about is a EURUSD short that I opened on April the 26th. The EURUSD has been in consolidation since January, despite the dollar's increasing bid among other crosses. Throughout April, I had been reaping the benefits from a dollar-yen long that I entered into due to changes in risk themes, particularly the S&P 500. As such, I had been following the dollar index and the EURUSD, looking for signs that the period of consolidation would end in a break that favored the dollar. I'm not normally a breakout trader, but when the price convincingly broke the horizontal range bottom below 1.22, I viewed the scenario as an overdue follow-through of a retracement of a bullish euro move since the beginning of the year. Looking at the weekly chart, we can see that this move has completed the C to D leg of a harmonic bat pattern. I would have liked the X to D retracement to be a little closer to the 0.618 Fibonacci at the completion of the pattern, but the EURUSD has so many influencing factors that technical patterns of this scope tend to be more blurry. I did close my trade out at 1.195 to book profit because the pair was looking oversold in the short term. I also had the opportunity to trade pound CAD last week, and I entered short from Monday. Starting in April, the Canadian dollar was exhibiting strength against less steady pairs, such as the New Zealand dollar with plenty of follow-through. An influence causing the CAD rebound during that time was a change in outlook on US-Canada relations concerning NAFTA from uncertainty to optimism. I'd been having plenty of success shorting the Kiwi CAD through April and was looking through the CAD crosses to see if I could pair the CAD against a more delayed mover. Sterling has been on an extensive bullish run for the past 7 months or so. An important theme has been the sentiment around Brexit's actual impact on the economy of Great Britain and the demand for the pound. For that reason, I have taken caution when considering pound short entries. However, this trade had multiple appealing technical components. Looking at the retracements that make up the harmonic bat pattern, the final retracement after point D, when the pattern completed, had formed into a descending trend that has two sources of confirmation. The first is that the price met little resistance clearing the local high at point B, around a price of 1.79. The second was that the moving average convergence divergence indicator had printed a bearish cross. This was a fairly short trade for me, spanning a range of about 5 trading days. I closed it out yesterday and took profit when a fundamental analyst whom I trust pointed out that the other CAD crosses on aggregate had reached a mid-level where they were trading at what he called fair value. Creating aggregate indexes for each currency in the majors is a very valuable tool, and I will put a link to his video in the description below. Now I'd like to go over some potential trading opportunities that I see as attractive early this week. First, we've got a pound Aussie short that I've seen discussed in a few outlets over the weekend. The two underlying fundamental themes serving as the motivation for this trade thesis are actually split in nature, though they are not in conflict. The first theme concerning the pound is one that I have discussed earlier in the video, the disparity in recent sentiment surrounding the impact of Brexit and the events in British Parliament. While the initial devaluation of the pound in 2016 was extreme and was certainly a historical move, the recent optimism that laid the foundations of the relief rally may be overdone as well. Here's a headline from Deutsche Welle, the German public broadcasting corporation. There seems to be a mixture of political uncertainty regarding the mandate of Prime Minister to carry out the provisions of Brexit. Whether or not May is successful in her plans is immaterial during the time frame of this trade. Ultimately, I believe that there is a sentiment building in relation to the threat of a violent transition or jolt that leaves Britain in a precarious state. be it rapid governmental turnover or a hard Brexit. As a trader who wishes to take into account broader fundamental themes, finding pairs that match uncertainty with strength is an objective I wish to have met before considering technicals. Also worth noting is that Thursday the 10th will be the release of both the Bank of England rate decision and the quarterly inflation data. The data print and monetary policy summary together will be a factor in the buoyancy of the pound after 7 a.m. Eastern Standard Time, 1200 hours Greenwich Mean Time, and traders may look to sell the news. As for Australia, trade seems to be an important fundamental theme. The previous sentiment from early this spring was that Australia's profitable relationships with the US and China could have been upset by the impending trade war between the two larger participants. That the nation secured an exception from the previously proposed US steel and aluminum tariffs is a welcome relief for the Aussie dollar. Looking at technicals on the weekly here, there's remarkable similarity to the EURUSD short that I traded last week. There's a harmonic bat pattern with a shallow A to B retracement and a slightly shallow C to D retracement, the latter coming in a bit below the 0.618 level. From a technical perspective, I'm interested in opening a position on this pair soon due to the freshly printed bearish cross on the weekly moving average convergence divergence confirmed by the close of the weekly candle, something that I see is now actionable. For the next few trades, I'll be looking at taking advantage of euro weakness. So they're going to concern the euro Aussie dollar and the euro USD. I'll be looking to use the euro as the weaker and softer partner for my bullish views on the Aussie dollar and the US dollar next week. They both seem readily tradable from a technical perspective on the weekly time frame. In both cases, I'll be waiting for intraday technicals to help time my entry. For the euro USD, I want to see the potential for a bullish retracement of last week's pronounced move to the downside on the 4-hour chart fade, though a pair as liquid as this one can move hundreds of pips before the other team can put up a response, so to speak. For the euro Aussie, this synthetic cross is further from the spotlight and on less watch lists. However, there's a loose 3 drives pattern on the weekly. Here I'm looking for continuation and momentum in the event of a break below the weekly open. The bearish cross that is printed on the moving average convergence divergence gives me another reason to think that there will be potential length in this early move to the short side. That's all I have for this week's video. Thank you for listening and good luck with your trading.